All right. Okay. Now, you wanted to talk about a number of things today, but one of the things you wanted to talk about was that I just listened to the promo, just can I say, before from Duncan Garner. He's currently filling in for Leah Panapa in our afternoon show. And Duncan's saying that he'd been a guest speaker or MC at the Real Estate Institute Awards and how they were doing it all. So did you hear that promo as well?
Yeah, I did.
And how bad it was, and it's a lot worse than people think it is. Your comment on that?
Yeah, so as the news item said, the GDP number for June quarter was minus 0.2 after a revised minus 0.1. So annually, we're just bumping along at basically a zero growth rate. If you adjust for all the migrants that have come in, it's a negative GDP per capita. So the composition of the GDP weakness is retail and accommodation, and interestingly enough, forestry, which might explain some of the closures that I don't think are totally electricity related. But what the GDP numbers are telling us is that there's not a lot of activity going on, and house prices they use different language, but they say it's a soft market or it's a challenging market. The fact is, the brutal facts are the house prices continue to fall in aggregate across the country, and that's also accompanied by very low turnover, as sellers are reluctant to adjust to new prices, and buyers, if they've got access to cash and equity, are still waiting. So that means real estate agents are in a bind. They don't have turnover, which drives their incomes. So Duncan's right to make those observations at that conference. That's exactly what's going on. I just wish people would speak very plainly about that rather than trying to hedge it in kind words. It's been, prices are lower than they were 4 years ago.
So are we currently in recession?
Well, technically it's supposed to be 2 quarters. If you talk to economists, they say 2 quarters of negative growth equals a recession, but plus 0.1 and minus 0.2. I mean, neither here nor there is a basically flat lining. So we're just a heartbeat away from a technical recession, basically.
You're the economist.
Doesn't mean much to your audience. The technical words are, it's still really hard out there. Cost of living is difficult. There's more unemployment coming through, as we're seeing in the corporate and the public sector. Restructuring's happening. People are trying to adjust as fast as they can, and that hurts.
Yeah, and that's the other thing. I guess we thought 2024 was meant to be a light at the end of the tunnel. It was called 2025. Is that right? Is it going to get worse before it gets better, do you think?
I don't think it's going to get better anytime soon. So this mantra, survive till 25, I think is just indicating hope, and hope's not a strategy. I think the key is to adjust now. So, restaurants are closing, but they're reopening again in different guises. Businesses are trying to restructure, manage their costs. So, there's no silver bullet out there that people are looking for. You've got to look to your own resources and make changes. The government is certainly signalling that they don't have cash. They don't want to borrow any more than the $12 billion they've already planned, and looking at cutting services, cutting government expenditure, trying to think of different ways to build and invest, which includes user pays, and the toll road debate is one of those debates where the public is being asked to consider user pays to fund infrastructure rather than the government's balance sheet. So this is going to be an increasing feature of the discussions we have as a community.
Yeah, and I guess politically, because these things all come back to who's making the decisions, but politically, Craig, just seen the latest poll come out this week from the Taxpayers Union Courier, but it would rather suggest that the public of this country don't see necessarily Labor, Greens or anything else around the horizon having any of the answers either.
Well, that's right. I mean, they've had their term, haven't they? And they were provided with a kind of a roundly beaten outcome at the elections, and this coalition has been asked to manage the economy better. The debt to GDP numbers aren't quite where I think we would like them to be, sub 40%. Nicola Willis, the Finance Minister, hasn't quite delivered on that. So I expect some more changes to come from her. And they're trying to encourage people to think more carefully about the use of our scarce resources and how to pay for them. So, yeah, that discussion is going to increase, I can see, over the next 12 to 24 months, which provides choice around, do I want to pay a toll? Well, I'll use a different road if I can. Otherwise, I'm going to pay what is $2.60 on the, I think from memory, on the toll road north of Auckland to Warkworth, or if it's across the Manawatu Ranges, what would the right price for that be? So it'll force people to think about using those facilities. But that is just going to be a feature of our debate going forward. Who pays? And it will be the users that will pay.
As an economist, though, Craig, and as somebody very much involved in the commercial sector, as you know, we're very much dependent upon our trading relationships with other countries. China and the US, obviously, our two largest export markets. Is there anything happening in those particular markets or in those particular economies that give us any cause for optimism?
Well, the dairy payout price is encouraging, isn't it? That's really good. Some of our farmers are getting the benefit of capital repayments as well as the dairy payout to help them with their costs as well as debt or mortgage costs. I'm still concerned about China. I mean, that's very much a weakening story around GDP growth. America is holding up really well. There's a little bit of discussion on that, if you don't mind. The US central bank cut their interest rates for the first time in their easing cycle. So you might recall they're sitting at about 5.5% for their central bank interest rate, and they've cut that by 50 basis points, which was kind of expected by the marketplace. So not much has moved in terms of currency or stock markets. So you might remember back in 2022, they were sitting at around 0.25, got to a peak in 2023 of 5.5. Now they've started the easing cycle because inflation is sitting around 2.5%. Their target is 2%. And although services inflation is much higher and is sticky, they've decided that the economy is weak to moderate enough in growth terms that they can afford to now start the easing cycle. That's very encouraging for us as an exporter to that country. So that's good news, and that will flow through eventually to New Zealand via the export channel, which then sort of brings us on to, well, how do we think about the election coming up in November? I don't know if you're aware, but unusually early voting has already started in the US. So in the state of Pennsylvania, voting started this week, which is why Kamala Harris and Trump have spent so much time in Pennsylvania, because it's one of those marginal states which is at the moment very hard to tell at all which way it will go. And so they're spending millions of dollars in that state to try and woo voters. Keystone State, it's important because 19 of the electoral college seats come from Pennsylvania, and of all the marginal ones, it's got the most seats, most electoral college seats to go for, which is why they're spending so much money in there. So then you say, well, you then sort of dive down to all the little towns and counties. You look at, I don't know, Buck County or the capital itself, Philadelphia, or up at Erie County. You sort of think about how those voters will shift, and if they shift at the margin, that can swing the whole state. And then the electoral college votes, which they need 270 of. So very quickly, as we get through this easing cycle, things start turning more. What will Kamala Harris do for New Zealand, or what does her election mean for New Zealand, or what does Trump mean for New Zealand? If you go on to Kamala Harris's website, she's got a series of issues that she talks about rather than policies. I guess that's just framing on possibilities, but there's not a lot in there that I can see for New Zealand per se. There's increasing tax credits for the middle class. There's another 3 million more rental units or homes, increasing business tax deductions for startups, maybe taking on some of the key banks and big pharma and grocery stores around their oligopoly status or their profitability. But there's nothing really there that says there's much in there for New Zealand other than our continuing to as exporters. Both of them have got, independent Fortress America type thinking. Really, they're not multilateral thinkers being part of the world. So the tariff regime that, kind of 10% tariffs from Trump he's looking at putting in place for all countries, or continuing with prohibitive tariffs against China, doesn't seem to be one that's debated between the two of them. So not a particularly inviting country for a trading partner, but a really important one with what we've got. So we've got to work harder, I think, on exporting to the US.